Hey, good morning, everybody. This morning we're gonna get right into it because today at 3:30 the House is going over the debt ceiling. They'll either approve it or reject it. The vote's in starting at 3:30. Probably will last obviously into after hours. Why do I have the SPY up? Because I've got key levels right here that I'm going to share. So if you want to screenshot this, you go right ahead. But I set up my reminder right here. And we'll talk about key levels of the SPY and we'll just kick it off. Those that are here early will benefit. Those that are signing in late, well, let's still get some good shit today. All right, so key levels of the SPY, wrote them down. You might want to do the same. 420.82, not so worried about that right now. And yes, we did go up to 423. Next level under 419.41. And yes, as we sit pre-market, a whole dollar under, a whole 25, 0.25%. So 418, key psychological level. Okay, 418. Then 416.61, 415.20, and 411, which is pretty big. 419.41, extremely large dark pool level, but we're sitting under that this morning. So when I see a large level at 419.41 in the dark pool, I say to myself, okay, it was previously support. It could easily turn into rejection today. The fact that we're starting out under there. Now, why are we starting out under there? Okay, because I'm going to bring up the big elephant in the room, which are valuation of certain tech stocks that have just been ripping. Anybody that wants this, I posted this on Webull. It's on our Discord. You can join anytime. House vote at 3:30. Mentioned that. Okay, here's the interesting thing. I was watching CNBC yesterday. Quick little story. It's kind of amusing. I'm watching Dan Nathan, right? And he's just ranting and raving how the bulls are so out of their minds. He's screaming the bulls are out of their mind, morons, idiots. It was epic. He's rolling his eyes. It was amazing because a lot of us are like, geez, this market is going crazy. But understand, we're not here to critique the market. I'm here to critique the market, but we're here to be successful traders. So if the market wants to rip crazy, okay, let's just keep the scenario in the back of the mind. What could potentially happen this week that could reverse the market's recent trend? Because granted, they've been buying the dip ever since we consolidated. Remember, we traded 3 straight weeks with 3 boring weeks. We traded in between 414 on the high side, 408 on the low side. Some days were extremely narrow. We had 2 inside days that we haven't seen in a row. I think it's happened 3 times in the last 27 years or so. So we were trading a narrow range. We broke out pretty damn quickly. Understand, NVIDIA giving guidance from 7 billion to 11 billion for the second quarter basically saved the market, okay? So they gave $4 billion upswing in guidance, and the market picked up $500 billion in value. Imagine if NVIDIA had guided down $4 billion. Would the market have gave back $500 billion? So I just want to put things in perspective for everybody to understand why things are ripping. I'll talk about my position. Why did I go into AMD puts yesterday and get called crazy? I profited once, and I'm holding puts, and my account will likely double this morning. I have 2 smaller accounts I'm working with and a larger account. But anyway, so let's get into it. 2 possibilities for the outcome. Either the Fed suddenly flips to quantitative easing so it can buy all the treasuries, because here's what's going to happen. So we pass the debt bill, okay? Then the government has to fund itself. It has to put all that money back in the piggy bank. How is it going to do that? It's going to issue treasury bills, right? So they're going to issue, I thought 700, maybe 800 billion. Now I'm hearing up to $1 trillion in the next 2 to 3 to 4 weeks. What does that do? Well, you have other banks, institutions that buy these treasury bills, okay? If they're not bought, the Fed has to step in and purchase them, okay? So what does that mean? Well, it means they have to find the money from somewhere. So what are they going to do? Well, shoot, if I'm a big institution, I'm looking to invest in T-bills, or I have to buy a certain allotment of T-bills, I'm going to pull it out from my biggest earners. Now, here's the other counterpoint to that. Institutions, big hedge funds, they report at the end of June. So the end of Q2. So they definitely want to have NVIDIA, AMD on their books at the end of Q2. But it doesn't mean they have to ride the elevator up and down. So they could be buying in. And this is what I see happening. I see some consolidation in chip stocks. I mentioned I was going to talk about chip stocks. I'm going to talk about some AI stocks as well. And I'm expecting some consolidation over the next couple of weeks. But towards the end of June, I'm expecting these stocks to run. And then I'm not sure what's going to happen in July. But institutions and all, they want to be in these stocks. Okay. Hang Seng market, China, dropped another 2% yesterday. That's over 3.5% in 2 days. And it's been pretty beat up if you look at the 1-month chart, which I can't do that because I took a picture of it. So if you look at the 1-month chart, it's still pretty beat up. Again, I mentioned my AMD puts yesterday. Small account. I start each week anywhere from between $200 and $249. I suggest doing the same for everybody until you get a good grasp on the market. Why? You limit your risk or your downside. If I screw up my account this week and I had a bad Friday, I had a great Monday through Thursday, a bad Friday. If I screw up my account, I'm losing at max $217, which is what I left in that account. I left $25 in the Webull. I'm trying to grow that Webull account from $25 to $1,000. Robinhood account, I might let it roll over depending on how I do this week. All right, Avgo, right? Chip sector stock opened up at $921 yesterday, $921, closed at $803. Okay, it's pretty even this morning. Okay, so big mega cap mega month. Okay, big tech, right? Alphabet gained $210 billion this month. Amazon, $202 billion. Microsoft, $191 billion. I'm talking about the market caps of these stocks. Apple, $125 billion. And Meta, $49 billion. I'm not even mentioning Netflix, which ripped higher from wherever it was consolidating all the way closer to 400. So I'm just mentioning some of these stocks. NVIDIA, up 44% this month. Avgo, which is Broadcom, up 28%. And the semiconductor industry, up a cool 19% this month. So understand, even if you think these stocks have some value and 10 years from now they're going to be the super giants, the stocks ripped higher. Nothing goes straight up. Nothing goes straight down either. Okay? There are always points of consolidation. So if I say that I'm getting into some puts and people say I'm crazy, I might just be looking for consolidation. Now, true, and I'll show you the chart. I am looking for AMD to have a nice significant pullback. Next, who's sitting out this rally? S&P energy stocks off 9% this month. And if you look at energy, it's probably off between 1% and 2% this morning, pre-market. Utilities off 7% this month. S&P consumer staples off 6.27 this month. Okay, so here is your S&P heat map for yesterday. What the hell do you see? A shitload of red. In fact, there were like 10 stocks that basically saved the market from being bloody yesterday. You look at Tesla, it was Apple, a couple of the other ones. Anyway, okay, last thing. I just want to explain the valuation of NVIDIA, okay? And I took this from somebody else, and he was talking about a different stock called Microsystems, Sun Microsystems, years ago. Remember what Sun Microsystems did? Yeah, it like shot up like NVIDIA, and now where is it? Yeah, no one talks about Sun Microsystems. So here it is. A price per sale ratio of 36, which is what NVIDIA has right now, basically tells you at 36 times revenue gives you a 10-year payback, okay? So I've got to pay you back 360% of revenues for 10 straight years in dividends. That's assuming I can get my shareholders. That's assuming I have zero cost of goods sold, which is impossible. That's I have zero expenses, which with 20,000 employees, which is impossible. That's to assume I pay no taxes, which is hard to impossible. And that's going to assume that you pay no taxes on your investment, which is against the law. It's also going to assume that no money is put into R&D over the next 10 years. All right. Now I'm saying, do any of you want to buy my stock at 400? Because that's what NVIDIA is selling at, $400 a share. Again, it's probably down pre-market, but I just explained they have 36 times revenue over 10 years. They've got to pay you back 360% of revenue for 10 straight years in dividends. Okay. Then they have zero cost of goods sold. So that means the shit that they're making, the chips, cost nothing to make. That means the employees that they're paying will take zero salary. It's highly unlikely. All right. I get people say there's value there. I understand. But at $400, I need to see some consolidation. Simple as that. Let's talk about artificial intelligence. AI, right? C3 Industries. Mentioned it yesterday's live stream. What did it do yesterday? It went up 33%. It went from $33 to like $45. It closed at $43. After hours, they had earnings. Okay. They shot up 2%, 3%. Matt Kors, the AMC guy, tweeted, hey, man, I'm looking for a short squeeze. They were up as much as 5% pre-market this morning. 5%. Last I looked, they were down 5%. Holy shit, Matt. You're telling me from just pre-market up 5% to, yes. Okay. You're talking about light volume, 103 million, which is a heavy volume day yesterday. Market cap of, I think, 4 billion. All right. NVIDIA, another NVIDIA stat. NVIDIA is up 46% over its 50-day moving average. So we all talk about how we gauge stocks. Oh, it's low on the bowling band. Oh, the RSI is too high. I'm going to short this stock. Well, the moving average basically is a guide of where the stock should be trading near. And most stocks trade within, a few percent of their moving average. When they go over 50, the day moving average, 200, it turns bullish, right? NVIDIA is ripping past its moving average 46%, which is why I said consolidation. Now, again, my play on AMD puts, and I'll explain my strategy there for everybody that likes to know about strategy, was shit. A lot of people really like NVIDIA. Okay. They did say guidance is going from 7 to 11 billion. That's why the stock ripped higher. However, AMD is not NVIDIA. So the fact that AMD ripped higher from 108 all the way to 132 or wherever the hell it went to, I'm like, okay, I get you should ride the coattails for a few percent. NVIDIA went up 33%. They said, okay, we're going to have guidance that's ridiculously high. None of these other companies said that. And there was a company, Hewlett Packard, that came out yesterday, HPQ, I think, right? That was off. Let me just see what we got going on there. Investing account, right? I made my predictions. By the way, Americans now owe over $1 trillion in credit card debt, and most of them are paying 27%. All right, here's the other thing about NVIDIA, and then I'll stop ripping on NVIDIA because, again, I like the company, just not at the valuation. NVIDIA is the perfect Ponzi scheme for the market as Wall Street picks different pump and dump narratives to take advantage of the current trend. Here it is, right? 2019, it was everybody needed chips for gaming, right? Gaming was big 2019. 2020, everybody needed chips for mining crypto. Everybody was mining crypto. You need chips, strong, powerful, freaking chips. 2021, remember? Anybody want to guess? It was electric vehicles. Electric vehicles were through the roof. Everybody needed chips for electric vehicles. Oh, that's not it. 2022, we're done with electric vehicles, right? Everybody needs chips for what? The metaverse. You need chips to metaverse to run high strength computers. Now, 2023, what's the narrative? We need chips for AI. Anybody that mentions AI shoots through the roof. So please understand. I mean, there's just different things people say, and it sounds great at the time. But does it last? I mean, it's hard for me to fathom. I sound like that guy. I pointed this out yesterday, this posting. Fed balance sheet is in dark blue, NASDAQ light blue. What happened to the Fed balance sheet, right? Boom, lower. And where is it dropping? Dropping, right? They got to do quantitative easing. So where is the Qs? The Qs is still spiking. So when I say pullback, that I expect some type of pullback, it's based on the volatility of the market. It's based on the liquidity of the market. I'm not calling that today is going to be red or it's going to be red, but I'm saying, hey, be prepared. Understand what happens when the debt ceiling gets pushed through. Understand that the liquidity needs to be pulled to the market. Government's going to issue $1 trillion worth of treasuries. Somebody's got to buy the treasuries, the same money that's invested in the market. So I'm in NVIDIA. I work for JP Morgan. I manage $100 million under. So I'm going to sell some NVIDIA. I'm going to sell some this. I'm going to sell everything that's running. I might switch into some utility stocks that are beaten up. But I also am going to buy some treasuries. It's just how they operate. I mentioned this other stuff. So let's talk about some stocks. Let's see which things are going pre-market. SPY is off 0.343%. So I already spoke about the SPY, and I gave my cheat sheet to those people that were early, and I'll give it now. Here are your dark pool levels of the SPY, okay? Huge level at 415.20. 418 is a huge psychological level. So the fact that we're sitting over 418, I have to watch that. If we break 418, 416.61 has very little volume at that level. So that's why I think if we break 418 to the downside, we will see 415.20. Understand the market likes to buy the dip. So if we pass the 418 wherever we are now, the psychological level, and then acts as support, I'll be paying attention to 419.41, which is a big dark pull. I expect that to act as resistance. And yes, we closed over that. So the fact that we're opening up under, if they want to buy the market and if they want to buy the dip, I would look for a rejection right at 420.82, which would mean we turn green for today. If we reject 420.82, and I think we'll have a 4-point range, then it wouldn't surprise me if we go from 420.82 all the way to 416.61. If 419.41 or 419.50 rejects, and I think we'll have a 3.5-point range, won't surprise me if we hit that 415.90 level. We don't all the way make it down to that other one. All right, so yeah, we'll talk about some stocks. Good morning. NVIDIA contracts high as hell right now. Yeah, totally. SoFi is moving. Why? Because the bill says that if you have student loans, you're going to have to start paying them back. And I think SoFi has a shitload of money and they make a shitload of interest. And if they're actually going to get paid, then people are saying, yeah, SoFi, good investment. So the SPY is sitting at 418.34. Mentioned my key levels. So I'm really looking for a drop on morning to see right at that 418 level. And when we spike off that 418 level, I'm really looking at 419.41. But I would love for us to touch that 415.20 level. It tells me that the market makes sense, that they're digesting this debt ceiling, that they're digesting that the Fed still has to raise a quarter point next month in June, whenever their meeting is it June 14th, I think, right? We have CPI and job numbers coming out before that. But if CPI comes in level with expectations and job numbers, we don't see people losing their jobs, right? The Fed is going to act and raise a quarter point. That'll be tough on the banking stocks. All right. And I'll get to some other stocks. What am I looking at? Qs are off 0.45 in line with the SPY. AMD's off 2.22% this morning. So, yeah, I'm going to be happy about that position. It'll take my accounts up 100%. What will I do? So let's talk strategy again before I go into some more stocks. I sign on to moomoo, right? When I sign on to moomoo, what do? I go to AMD, okay? Then I go to options. Why? Because moomoo allows me to get theoretical pricing of my options. So I'm in the $120 strikes, all right? They closed at 76 cents. They're the $120 strikes expiring this Friday. It closed at 76 cents. What is moomoo going to tell me? Based on the price, I guess I got to scroll up. I can't just move my phone up. Based on the price, if this were to open right now, the theoretical calculator tells me that my options would be worth $165 each. So we also know the market tends to open like this. So what might I do? I might say my theoretical price, again, I'm in at $79 on these. It's telling me $1.69 right now. $1.69, I'm in at 79. So I'm going to say, okay, that's giving me over 122% right now. What will I like to do? Well, the market will be somewhat volatile at open, as we see it every morning. So I'll say, okay, if it's telling me I can get now $1.70, I might add 5%. Remember my nibble, my 3% nibble, I did a video. I might do 5% because it's more volatile open. I might do 3%. Let's just say I take the 3% and it's $1.70. 3% is an extra nickel, $1.71. Add the extra 5 cents, $1.76. So we close at 76. I'm going to look for $1.76. Okay? Simple way. And why would I look for $1.76? Any hands up there? Yeah, I mean, I'll call on you in the back. Yeah, exactly. I'm looking for $1.76 because I know the market's going to be volatile at open. People are like, hey, man, are there people out there? No, I'm just screwing around, man. I'm having a little fun. I try and be entertaining. The point is, I'm going to nibble. I'm going to plan. Why? Because when AMD gets bought up 5 minutes into the market and I'm already out of my position with 128% profit, right? My account's about, what can I do? Well, 3 S's: safe, stress-free, secure profit. What can I do? If I see them buying up AMD and I go, okay, let me look at 10 a.m. So then I'll look at 10 a.m. If I see inflow, I'll stay away till 3 p.m. and re-enter my position. If I see outflow in AMD, yet they're buying it up to whatever level, I know that I want to re-enter my put position. Okay, so that's how I use moomoo. Again, theoretical pricing now $1.72. So I'll look closer to open. I'll decide where AMD could do right at open, and then I'll think what theoretical exit could I get, and I'll secure profit. Yes, hit that like. I like the 3 S's as well. It's always about safe investing, right? It's always about securing profit. Okay, people don't understand that. They ride the elevator. Yeah, I was up 180%. What are you up now? 18%. Wouldn't it have been so much better to take 180% on the way down? And I screwed this up yesterday, and I'll give my example. For AMD yesterday, and hit that like if you like me talking about how I screw things up. All right, I went into AMD, and I went out of AMD. I went in at $88 originally. AMD option went down to $55. On the way down, I bought it $69.55. When it went back to $89, I exited. Okay, I secured profit. If I didn't average down and I all bought everything at once, I would just break even and I probably wouldn't have sold. And then I said, what am I going to do? When it drops, I'm going to re-enter. So those $120 puts dropped down and I got FOMO and I re-entered at $79, saving myself $10 a contract or about 12% on my accounts. However, from $79, I said it was going to drop to 73. So it dropped past 73 and it went all the way to like 67. So if I exit out 89, imagine getting back in at 69 instead of 79, right? That's an extra 12%. I could have saved 25%. I saved 12. So I did good, but I also did bad. I saved 12% that I wouldn't have in my accounts if I just rode the elevator. However, my real strategy was, man, sell at 89, buy at 73. Save yourself 16, 17%. And I couldn't wait for 73. I'm like, it should definitely go back to 73. And instead at 79, I'm like, I just don't want to miss out. I had FOMO. I just don't want to miss out. CCC. Let me just see. I got some other stocks I want to talk about. Where are we at? Okay, Palantir. Again, strong run on good volume. But if they decide to consolidate with Palantir or Upstart, right? Or, okay, so we'll talk about AI companies. That's where I was leading into because that's this grouping right here. Palantir, yes, you guys didn't know that. They're an AI company, supposedly. CA3, right, which is AI, that's their symbol, up 5% pre-market, now down 6%. So expect extreme volatility. If you're in this AI stock, expect volatility because those in calls will probably buy it up at open, try and get as close to even as possible to exit out, but now it's down 6%. So Centennial 1, down 1%. MDB, down 0.8%. And then that pipeline company with Senator Manchin from that's not an AI company. And in fact, I want to take it off my screen because it just makes me upset. Okay, so I'm looking at the U.S. dollar. Again, I will go back 5 days. What looks to be happening? U.S. dollar looks to be going up in an up angle, making the market a little more bullish. So I'll keep my eyes focused on the U.S. dollar. Tesla. Man, there are so many clowns out there toting Tesla. I know. Best-selling car, right? It has the best-selling car in the world, Tesla. And I get it, right? But I look at valuations, and all I see is them buying this shitload of Tesla. And I mentioned this to Discord yesterday. The most actively traded contract yesterday were Tesla calls. Now, that could be people entering, people exiting. It could be swing plays. It could be whatever. I'm actually looking for Tesla to pull back. So, I'm a contrarian. I'm looking for NVIDIA to pull back. I'm looking for Tesla to pull back. I'm looking for the Qs to pull back. Let's remember, the Qs were just at $325, right? Then they spiked yesterday morning. I made my guess, and it was like $353, okay? And I was like, holy shit, I can't believe it's $353. Where are they now? $349, right? Something to that extent. Qs, $349.98. We closed, and we're opening at $348.41. So even when I look at the 5-day chart, I'm not even talking about the ridiculous run that we've been on. When I look at the 5-day chart, I say to myself, we could pull back to this level right here. So I say to myself, okay, what is that? 339. That's a 3% down move. Understand, even if we don't, we could definitely pull back to this level right before when we spiked to, because we know they spiked to that level and we found support. Where's that at? Let me just see what that level is. 345. So we were at 349 on the Qs, okay? They were up yesterday, 0.45%. If I say even if we pull back, and I think the pullback can be worse than that, but even if we pull back to 345, that's 5 points. That's like 1.3%. So I'm saying if the Qs could pull back and if technology pulls back 1.3%, I'm not asking for a whole lot, but let's just say 1.3%, okay? Say the SPY pulls back 1.3%. Let's say 1%. You're talking about that 415 number I spoke about, 415.20. So when I come up with these numbers and why I expect to hit certain ranges, I just want to give you the reasoning behind it. So even if you don't agree with me, let's say you're a bull in this market and you're like, 418 is it's a freaking buy. I want to buy the market at 418 on the SPY. You're a bull. I'm not, but you're a bull. You say, I'm buying that dip. We're going to see 418. Matt already told me we're going to see like a 4-point range. If 418 acts as support, we're going to 422. And then Matt said earlier that the dark pool level at, 421 is so small that if we crack that 422, well, then we'll make it to 424. And then there's a dark pool level all the way up to 428. So I'm a bull, you could say. Again, I'm a bear, but I'm just giving you a scenario. Scenario is you're a bull. You say, okay, 418 we're going to drop to. Next 2 days, we're going to rip higher, and we're going to see 428. That's your bull case scenario over the next 2 days. All right, the deal gets done. The market doesn't care that the government's issuing treasuries, and you think that you're going to bull and the market's going to go higher. Well, I'm telling you where the market's going. If you're a bull and you're correct, and the market shoots higher from 418, finding support, we're going to 428. You're going up a whole 10 points, a whole 2.5%. That's your bull case scenario. Your bear case scenario. Now I say we're trading a range, but you say to me, Matt, I know the market's going to get ugly. I'm a freaking bear. How low can the market go? Well, let's just go back a couple of weeks. We know that 408 was pretty decent support. And under that, which we visited twice, 404, which we double bottomed off of. So the fact that we're sitting at 420, okay, and then we're saying, okay, 404 from 420, what would that be? 16 points, 4%. Well, let's remember 2011, 2013, we signed debt ceiling deals. 1 year we went down 5% on the SPY real quick, the S&P. The other year, we went down 16% because we had a government stoppage and the U.S. got downgraded from AAA to maybe like AA or some shit like that. Okay, that's not going to happen, even though Fitch is talking about downgrading the U.S. If that happens, markets will drop. Mr. Jacko, you average down often and you still end up losing. I'm going to give you an example of what you do wrong then, okay? Number one, you buy too many contracts at first. And you're like, nah, Matt, you're wrong. I only buy one contract at first. Okay, if I'm wrong there and you're still losing when you average down, number two, you average down too soon. You're off 10%. You're like, man, that sucks. I hate 10%. Boom, bought a second one. Now I'm only off 5%, bitch. What do you think? And then you're like, holy shit, it just dropped 30% more. And then you're like, I buy 1, 2, 3, 4, 5 more. And then it dropped another 30%. You're like, I got no more money. Matt. What do I do? Then you're like, okay, I'm just going to hold the position. It actually rebounds, but you're still red about 3%. And you're like, screw that. I didn't risk all this money just to be red 3%. And you missed your chance to get out. And now you're down 60%. And then you call it quits. I'm out of this fucking trade. I lost 60%. I'll move on to the next trade. And then you do the same shit. History tends to repeat itself. And I know this for a fact because I used to grow accounts and I would do this every freaking time. 2,500, I would grow to 65,000 within 2 to 3 months. I remember, what was it, 2021? I blew up my account 3 times. The only one account I was trading. 2,500 to 62,000, blew it up down to 1,500. 1,500 up to 71,000, blew it up to 2,200. And then the last one was that Netflix, where I was on the wrong side of earnings, where I went from like 1,400 to like 64,000. Thought I was going to be right about Netflix earnings Q2 of 2021, and that I'd be worth $250,000 from that $1,400. Instead, it went down, and I exited out at like 1,300. I was lucky to get that 1,300 the next. Yes. So that's exactly what happened. So again, ways to improve your trading. This is like a personal lesson. Anybody that follows along these same characteristics or flaws, it's like, first, next time you're going to enter, instead of entering and buying that one contract, add it to your watch list. So instead of making that first purchase for one contract, just add it to your watch list. Then when you're watching it and it's down 20%, that's when you buy your first contract or your first 2 contracts. You're already down 20% on your watch list. So you're like, shit, I just saved 20% entry. Now it drops another 10% or 20%, you know? And yeah, Pablo, you've done it. Shit, I've done that. I've been trading 27 years. I've been trading 22 years of options trading. And I am still guilty of everything that I talk about to warn all of you that like to watch me and give me thumbs up, which hopefully you're doing right now and subscribing. I talk about my flaws to help you avoid falling into the same pit holes. And like, here's one of my flaws right now. The past literally 4 weeks, every Monday, Tuesday, Wednesday, Thursday, I've been green in most of my accounts, like across the freaking board, trading off. And every Friday, I literally get ripped a new one, okay? Even though I tell myself it's Friday, be cautious, I literally have lost so anyway, that's just me sharing. Hopefully that helps. Let me just see if however we got played out. I already mentioned Hang Seng, HPQ. Let's see what we got. Advanced AMD. I love it. So what am I going to do on AMD? So it's a really tough call. I mean, even when other stocks are getting support this morning, AMD is not. Like I looked, it was 123. Then I'm like, oh wow, that's pretty good. That's lower than yesterday's low. And then I check back 30 minutes later, and I'm like, okay, now it's 122. I'm like, holy, okay, I'd be happy with 122. And then I see they're still selling it. So again, I'm probably going to look to exit out at open and then re-enter pretty quickly. It's always good to take profit. I'm not going to lie about that. But again, if I think this SPY is going down to 415 and this is your pre-market activity, it hasn't given me any reason to think the markets will turn around. But again, it's more volatile and, volume's been at 279,000. Understand within the first 5 minutes, we're going to see 3 million. So if people say, I don't know why the market's selling off, I want to buy it, institutions say that, then the market will go up higher. If institutions say, holy shit, the market's about to sell off and plummet, then you're going to see 418 to 415 or 416 right away. And then even if there's a little bounce, the market's already telling you, hey, we're going to sell off. So please pay attention to that. Said things I just said because I want to more, I could afford what watch list went from 69. Yeah, I mean, that's crazy. Anybody that has a watch list over 30 stocks, you're doing you're being detrimental to your own trading. You should have a watch list of like 5 stocks. If you want to add 2 more because you think they're trading like crazy, fine. But focus on 5. In fact, focus on 3 stocks, 3 ETFs, whatever it is. If you can master 3 stocks, 3 ETFs, whatever it is, you're going to be a great freaking trader. If you're like, I'm in Palantir today, I'm going in Exxon tomorrow, and then I'm going into Moderna on Friday, that's 3 different indices. And you're like, I'll buy some US Steel. Well, shit, we know the markets aren't moving together. I mentioned this to start the video that we have certain sectors, healthcare, retail, energy, all off this month, 6, 7, 8%, whereas we have technologies just ripping this month. All right, so wait for the rotation. When they rotate out of technology and this AI shit gets played out, yeah, I'm going to see some pullbacks. All right, I'm heading over to Discord. It's 9 a.m. Anybody that wants to join me, please do. Check in Romeo's channel, see if he's live trading today, and I'll see you all later. Have a great day. Please join me.